Welcome everyone to the Kendall Report. So anybody that voted on no sound tonight, not going to happen. Anyway, welcome. Make sure you hit the like button, subscribe, all that good stuff. So folks, I doing another live on Sunday night. I will try to let you know on Twitter. So if you're not following me on Twitter, it is PortfolioXpert with no E. And so make sure you go there, and that will get you alerted to what my plans are for Sunday night. Even if I don't go live, I will at least post the video as a premiere so you'll know that it's upcoming. All right, so let's get into tonight. Yesterday's market action was pretty impressive. We saw, especially into the close, those of us that were in the live room saw this surge come in, and it was pretty impressive. There was just a lot of short covering bid coming in last 5-6 minutes. We printed all the way up to 77. R3 was 82. So one of the things I forgot to do last night, I won't tonight, is to put the expectations out. They were S1, R2 for yesterday. We exceeded R2 right into that last 15 minutes of trade today. So pretty impressive overall. So let's talk just before I get into some of the comments for tomorrow. It's interesting because every metric that came out this morning came out better. Now I know we're looking in rearview mirror. GDP, we're looking at fourth quarter 2.9%. That's just a good number to finish the year. I'm not sure that we are seeing some softer metrics in January, but overall, it's pretty positive. And as far as, if you recall, if we flash back for a minute to last January, it was massive selling coming in, and nobody was wanting to own this market as we came into year end. So into the beginning of the new year. This year, just the opposite. You're looking at, S&P up about 6% for the year. And we're looking at what is it? Tuesday or Monday is the final day of this month. So for all practical purposes, tomorrow is the last full week of January. And like I said, it's been pretty impressive. So I don't like these statements, but as January goes, so does the year oftentimes. And when I go through the database, continuing to have really good traction, seeing even more buys coming in on a short-term basis. And I'll go through all those details, so I'll save that for a minute. But the claims came in better, 186,000 versus 205 expected. We're looking at the continuing claims. Claims were up just a little bit. House sales were better, a little better, not a lot, but better, in line plus. And then just every metric, as I said, just came in better, and we'll go through them all as we go forward to tomorrow. The big number is going to be, of course, the PCI number, expected to be up 0.1 year over year. It's expected to be at 5%. Last month, the previous was 5.5. Maybe this number comes in a little better. We'll see what happens here. But I told you before that I thought that the inflation story was the old story. I still think it is, but that doesn't mean that we can't get a knee-jerk action out of this stuff when it comes out tomorrow. So watch for that. When that comes out, we could see a little bit of action. It's interesting. You'll see when I go through the hourly algos, it looks like we're going to fade, stay flat to down from where we are right now on the S&P. So also in a few minutes, I'll go through those details. Yesterday, S&P up 1.1, NASDAQ up 1.76. The futures were up a better part of 2% on the NASDAQ 100. That's a composite number, and Russell up 0.7. And last night's video I talked about, I thought the Russell was looking stronger. I still think that's the case, but it doesn't have to happen immediately after I say it. Overall, I think we'll see the Russell start to kick in. The NASDAQ took over yesterday. I think people are just, when they start looking for something to buy, all they can think about is Apple and Tesla. Of course, Tesla was a big player, up 11%, and so there's that. And so Okay, let's get into tonight's comments that I want to make. I told you there's going to be a continuing theme as I go forward. And the theme that I see happening going forward is this continuing shift. I was just flashing back. I started in markets in 1979. And if you looked at where we were in 79, coming out of the stagflation, the Jimmy Carter craziness, and coming into when Reagan came in and Volcker was running the show then, and he was highly aggressive in getting rid of the inflation that was there at the time. But this was a shift that happened in the economy, and it was interesting. So we went from this inflationary shift to high level interest rates. And I mentioned last night I bought a house in California in 1985, or I guess it was 85. I may have said 86 last night, and my mortgage was 13.25%. Didn't even flinch to think twice about it. And it was, I believe, a variable rate, so it ended up going down. I've obviously been around the bond market for a long time. I was a market professional then, and my view was that rates would come down, so that's why I wanted to do it. But regardless of that, the economy was running on this, and I talked about this a bit last night. So we go from that shift, so there's a big shift, higher interest rates, economy actually did really well. There were a lot of different scenario, government spending cuts, all that stuff, deregulation, everything that Reagan did. And then as we come into 1987, we had the crash, the exuberance that Greenspan talked about. So we saw this entire shift again in the economy. And then from that standpoint, we started the next level, and then we started to come into those of you that were around in those days, you'll know that in the early 90s, when we came into Bush 1 and then into the Clinton days, as we finished the 80s and come into the 90s, we saw another shift going on. Of course, that was coming into the big .com rally and all of those exuberance. So basically, every time we see these iterations in the economy, we continue to see shifts in how market participants, the economy acts, how the populace spends their money, where they run up debt, spend money, save money, all that stuff. So I bring us, I could go through '08. We know the GFC was a big deal. And then, of course, that was all the basically zero interest rate policy that we've seen for the last 12, 14 years, depending on how you want to measure it. So now we're at a new phase here. And I talked about this last night. I'm going to keep pushing this narrative here for a little bit. And I know I'm not the only one that has this viewpoint, but what I have a different view for. I'm not sure what it's going to look like going forward, other than I know it's going to be different at the moment, and we're going to see a lot of different metrics going forward. And there's another element. Every one of these periods of time, I just very briefly mentioned. I could go into long conversations about each period. But in this one, we have something else that's happening. We just saw the disaster out of 2020, supply chain disruption, all that stuff, globalization. And now the big question is that the way to go forward? And the answer appears to be, at least from a sentiment standpoint, is no. It's back to, now we're talking about onshoring. Instead of offshoring, we're onshoring. And as I've talked about, I believe that's going to keep all costs in the economy much higher. We're not going to see any real fall. Like if this PCI number comes out tomorrow and it's at 5, maybe it gets to 3.5 or 4, but that's probably the bottom. It's never, I wouldn't say never, it's not likely to get to the Fed's 2%. If we did that, we'd be in some kind of inflationary period. And I would be remiss not mentioning that, according to Joe Biden, if we ship tanks and other types of military equipment to the Ukraine, that's the beginning of World War III. And if that's the case, the markets sure don't give a darn about any of that. And it's interesting because in the live room today, all this stuff is kind of running around. You see all the noise, and no one cares. So markets are fearless at the moment. So maybe that's a good or bad thing. But the bottom line is there's definitely this big giant shift going on. We're at the very beginning phases of this. And at least for the moment, market participants are optimistic the way the flow is coming into the market. And I mentioned this also the other night, is I still believe there's a lot of money on the sidelines. There's a ton of money to come in this market. And that's why I believe that ultimately looking for cheap, maybe that will be the secondary stocks such as small cap, mid caps will still be somewhat more in favor. S&P has got a pretty good blend of everything. It's pretty heavily weighted on the top end, but when you start to look at the back end of the index, it looks a lot different. And so, and I don't see that the NASDAQ is completely out of play because of the large caps. They can just recover a little bit. If you look at the FANGs, let's just mention that for a minute. If you look at the FANGs, if they recouped, let's say 50%, the Amazons, all the stuff that's been hammered down, right? They recouped 50% of their losses. Everything else stays stable. What happens to the indexes? Markets go up pretty substantially. And I've been talking about S&P going up to, at minimum 42 handle, 44, potentially a 46 handle. Don't see an all-time new high, but that could change as we start to see the metrics come out. So I just wanted to get that out and really continuing that story, because I think that's the right way to look at the markets right now, is if you continue to, just like we're talking about, we looked at GDP, if you continue to look in a rearview mirror for your investing, it's not going to be good. So yeah, GDP was good, fourth quarter. Going forward, if you're looking forward, then you have to go expectations of what's going on. And tomorrow's a big day for me and my company from the standpoint of our software. It's a Friday. I'll go into the details on what that means. But there's a lot of forward-looking scenarios that are unfolding right now that appear to be pushing the narrative as we finish this month and come into February. So let's go ahead, take a look at the Wavetech database and get into the rest of the video for tonight. So here we are. The database has uptick again from right at 70% back to 77.75, 330 buys, 158 sells, a 2-to-1 ratio on the buy sells. So we're seeing a continuation of the database staying above 70%. There's a range of 68 to 72 that is pretty significant. And the big deal for tomorrow is actually going to be right here. I'm going to put this somewhat on a larger screen. And I go to the weekly, we're at 45.58% bullish on the weekly. There's 7,239 symbols long right now. And when I say they're long, this is, I try to unpack this for you so you understand, especially if you're new to the channel, as these signals, let me just change this screen over here, and I will go full screen so you can see this. Unfortunately, I don't have a way to zoom in on this with this platform I'm on right now. Hang on one second. So when we look at this at 45%, if we look over to the right here, what you'll see is, in fact, let me just draw a couple things in, because this is going to be a significant viewpoint from the standpoint of what's going on. So what I'm talking about is this box that's over here. I just put green lines around. And what we're looking at here is a couple things. Right now, the average long on this 77% on the short-term database is 39 trading days. The current duration is 20. So we're about, we'll call it 60% through right now from that standpoint. Actually, it's 50.33. It's on this line right here. We look at the average profit. This is only for 30 days. So the average profit on these symbols is 11%. And there's standard deviation is huge because of the short-term volatility that we've seen over the last year. This has got a 1-year look back. The current profit is 6.2. So same there. we are right now 55% realized there. But we go over to here on the optimized weekly right here. This typically holds 205 days, and you'll see right now the current duration is only 23 and 11% on this database here. So this is telling us that there's an awful lot of potential on the upside. So if we see the markets come back into getting over 48, 52 plus percent long on the intermediate database, then we start to have this huge forward-looking scenario. And all of a sudden we're carrying, as you can see, 205 days forward. Most of the average trade, that doesn't mean every trade will hold that, but the average trade in the database, looking at this massive database of 15,882, that tells us that the forward-looking part of this, there's a lot to go. And I'm telling you, I've studied and lived and breathed every week of this database literally since 1998. So I've got a pretty good history and understanding. And those of you who watch this channel a lot, you know that this is significant. And we're at that phase, and I've been talking about this going back into, let's say, December, November, December, that we're starting to get traction on the intermediate database. This is the biggest thing that's driving my forward-looking thoughts, and why I continue to believe that it looks like we're going to see a substantial move to the upside, and more so on the individual stocks than maybe the indices. And unfortunately, most of the internet world is focused around drawing trend lines on indexes and talking about what the indexes are going to do. And I do that as well here. But when you start to get into this level, you start to get into quite a few of the some of the metrics that happen on an individual symbol. I mean, look, for example, Tesla up 11% today. So you can see a lot more volatility in the individual stocks. If you watch this channel back in 2020, when Warren Buffett sold all the airline stocks, I built a daily portfolio for using this process here on Wavetech, built a daily portfolio at that point in time. And we made 105% over the next 12 months on trading those airline stocks. And so when you see the big reset like we had last year, this is a major reset in the markets from that from the standpoint of all of these trends. We got down to 7% bullish last year on the intermediate database. I remember going on for months and talking about that we basically own nothing, and so that's the case. We now own something. We own almost 50% of the database, and we start to get a little more traction. I know I'm getting a little long on this scenario, but this is important to understand, especially if you're following me, to understand where the perspective comes. I'm not drawing a couple of trend lines and talking about wedges and head and shoulders bottom. This, sorry to offend anybody, very amateur viewpoint of how the world works. The world doesn't work on those things, and most of the analysis out there is pretty poor. There's some good stuff, but for the most part, I don't do those things. So when I look at it from a quantitative viewpoint here, this is what I'm seeing in the markets right now, and this is in Bob's world is very significant. So I spent a lot of time. I think maybe I'm so deep in this thing here that I am. Hang on one second here. I have to kill this process here, and I'll bring up. I'm just too deep to quit on this thing at the moment here, folks. So I'm just going to do one more thing here, and then we'll complete this section and we'll move on. But I really want to make this point because I think we're at that juncture of where the markets are really at a phase where this is the scenario that we're looking at here. So we're looking at literally, this is where we are right now, is basically 42, 45%, this line right here. And as we get up to more, if we get up to this 68, 72% peak, you'll see that I'll be talking about the database is starting to erode and the bullish percent will be dropping. Meanwhile, all of those forward-looking thoughts that I just put on there, these 205-day scenarios, I was thinking about today, I'm going to try to put a metric together that shows the week-to-week output and shows how those things, if you start stacking over the 200-day plus scenario, you'll start to see how this all plays out. But this is a basic matrix, not an exact, but it's a basic matrix of what goes on from the database viewpoint. So this is the reason why I spend so much time on this tonight, because I think we're at a critical juncture, and over the next couple of weeks as we come into February that we're likely to see more traction. It's fascinating to me that the daily database is staying above 70%. Okay, I know I got a little long in the tooth there. Let's move on and get into the S&P. All right, as I look at we'll start with the hourly algos as usual. And what we're seeing here is just a consolidation. During the market date, I mean, the algorithms were absolutely amazing here. They were indicating that we're going to get a rally into the close, and boy, did we. Just continued to move into the close. Now what we're suggesting is that this indicator, the PPM1, is starting to drop down, but it's still positive, even though all it's doing is losing some momentum. So the number that you're going to want to watch here is around 40.60. That would be a pretty good buy. I'll bring up the market grid here in a second. Matter of fact, I'll bring it up on TradeStation. There's a slightly different calculation, the way that TradingView does it versus TradeStation. So I'm just going to go with that for the moment. But what we're seeing here is all the algos in the longer averages in the 40 period moving average and hourly is right now, there's a fib target on the downside is right at the fib target one low is 40.36. That's a little extreme. It looks to me that we'll be able to hold worst case right now at 40.20. So let's go over to TradeStation and just take a quick look at where the market grid is. And I'll bring that up for you so you can see it. I apologize for not doing this last night. And this is weekly. Let me move this over to a daily. So right now, last trade, we're looking at 40.65. And if you're around, watch that last hour of trading yesterday, we traded 40.60, 40.68. The high was 68. And then we surged into the close and we saw the market move all the way up to 77 on a little spike at the end of the day. Overnight so far, we've actually been 67, 61, pretty tight range. But let's look at the market grid here. Right now, R1 40.89, which would be a new high from yesterday. S1 is 40.62. We've actually printed S1 already. There's a good chance we could see the next level down is 47. It's a possibility, but I think we're probably looking at S1, R1 with the potential, because of this news that we have coming out with PCI, printing R2, which could print the 41 handle. I was talking about this yesterday. Bear with me one second, White. I love it. At least the trolls are back, folks. Bear with me 1 second. All right. So sorry about that distraction. I hate when that happens. Yeah, so as we just take a look at this stuff, that looks like a pretty good expectation. I want to go over to the weekly just for a second because I want you to see what we've done. Look at the weekly expectations. I remember covering this on Sunday night, and you're looking at 40.85 is R3. So far, we printed 77. We could easily see that thing peak out here at that 40.85. RXT is 41.15, and you know, I've talked about these numbers, but we're seeing a substantial amount of Fibonacci projections coming out, all types of stuff. So let's go back to the TradingView platform. Just take a look here. So let's go ahead and we're going to go to, let me put the daily up. I thought I had this loaded up. Take 1 second. Yeah, so we're seeing these surges. I was talking about a couple of days ago that it looked like we're going to get some, it looked like it was trying to backfill, but what we're seeing here is the algos are continuing to suggest this angle of attack is going to continue. And we're looking at, literally looking at probably as far as the upside goes, starting to break above this pattern here and possibly getting into back into the mid 4100. We printed 4180 here going back on December 13th, and then we just traded off from there. And I've talked about this before. It really is sort of a situation where this whole market trading going back to November is really trading in a broad range. So we're starting to look like at least we have a chance of breaking out just because of the configuration on the daily and the weekly. And the last time that when we printed up to the, and on the 13th of December, when we printed up to this level, what we didn't have is we didn't have the database behind us on pushing the market through. This time, we've got, like I said, 45% plus bullish database. We're going to have output tomorrow with the short-term database being a 77%. Just all the probabilities are stacking up, and you folks should know this, that nothing's certain. Markets are, all about probabilities, and the probabilities are really stacking up for higher prices. And I've been pushing in here the 42 level, 44, 46 extreme, no all-time new highs, no ATH at the moment, but certainly a general sense of some of these cheaper stocks starting to come into the mix. And that's what I'm seeing. So it's a little bit different when all you do is look at indexes and try to figure out what the market's doing. When you start to, I made my point pretty clear with the long-winded view of what's going on in a database, but this is exactly what's going on. So I love these comments. We're still in a bear market. Okay. Good luck on that. Anyway, so the point is, and everybody learns. You've got, some of you been around this channel for a couple years. I mean, the trolls were out in big time in 2020, and when we came into November of 21, I was screaming. Our database went super bullish in November of 20, and everybody was telling me how we're making new lows and end of the world was coming. That wasn't it, was it? So just keep watching. Appreciate everybody participating in here. And, like I've always said, I don't care, even in comments, you can disagree with me. That's cool. Just don't call me names, especially the Frankenstein report, right? Pretty funny. All right, so let's go and let's move on here and let's go to the NASDAQ. All right. So looking at NASDAQ, this is weekly. It looks like we still have some stability. This is projecting into at least the first week on, this is the daily, so above the 200. I like the 200's been a pretty good resistance point, but this is something, and the reason why, if you haven't got these indicators, you should have them. But look at the PPM at the bottom, the PPM 200. It actually signaled, this is a daily, about 3 days ago, it broke that we're actually going to be able to sustain a move above the 200. So we're doing that right now. And the upward slope, we're seeing still positive slope here at 0.39, 0.43 on PPM 1, very bullish, anything over 0.25. PPM 2, 0.47, PPM 3 is just trying to turn up, but this flat moving averages. And in the live room, I think it was yesterday, I went through a great detail. We took all the indicators off and just talked moving averages, configuration of moving averages, patterns, and those type of things. And as many of you know that have been in the room and all that, is it's really about understanding how the configuration unfolds. And I mentioned in longer term viewpoint when I went through the S&P all the way through the quarterly, is these are bottoming patterns. These are not, there's a lot of bad Elliott wave going out there. This is not the 1, 2, 3 where it's going to collapse and go into new lows and we're going to 3,200. I saw some guy on one of the shows on CNBC I turned on, and it was a guy from Morgan, and he was telling how their whole thesis of everything. I can tell you, I'm an ex-wirehouse guy. I'm an ex-institutional guy. This guy's like the next Ed Yardeni. Ed Yardeni used to be our head economist at a firm I worked at in the 80s, and he was always wrong. I worked an institutional desk. We faded that guy all day long and basically did not take the firm line. And people are going, well, isn't Yardeni saying this? Yeah, he is, but he was like as good as Kramer, okay, just to give you an idea. So a lot of these analysts, you have to understand, I've talked to you about this before, the analysts that you see and talking heads that show up on the CNBCs and those guys, they're marketers. They're marketing the firm's opinion to sell stock, to do whatever. I don't know what their benefit is right now, but they're really still talking. It's almost like we want to get the cheap inventory. And then once the market starts to go up, then they'll go, oh, it's okay, now you can buy, and they'll sell you their stock, right? So anyway, so I won't go too deep in that, but that's how Wall Street works. And once you figure that out, so all these guys are we'll say playing down any rallies. Yeah, it's rallying, and so just know that you're being influenced. And I keep telling everybody, be careful. Be careful what you listen to, especially on these talking heads. These guys are all representatives of a firm with an agenda. It's not quite. I almost wanted to go through and bring up Pfizer stock. We'll just say it's not looking very good right now. Looks like maybe they're not going to sell as much product as they had hoped. We'll see what happens there, but it's pretty negative. But the bottom line here is on the NASDAQ, this thing's going to continue higher. And I talked about the 13,000, 14,000 levels last night. But I'm telling you, this is one of the best looking, let me go full screen. This is one of the best looking bottoming patterns I've seen for a while. And we're right here at the 200-week moving average. We should do some sort of retracement here. Maybe we get up to this peak over here. There's the 14,000. Maybe we get up to that. Maybe we start to challenge and do some kind of fib retracement here. At the moment, let me put this up. So I just turned on the fib projections, and this is what I was talking about last night. 13,150, 14, I'm just going to round numbers, 200 and 14,800. Those are the targets for this pattern. And the logic that's in this in the Wavetech tools, it actually has these pivot points, are these triangles that you see here are the pivot points, so that I have built logic to recognize the tops and bottoms of these patterns, and then it takes this information and does a Fibonacci projection off of those patterns. And the pattern tool and this and our cycle tool all work off the same logic. And this stuff is way more accurate than if you did a zigzag tool or something like that. Those are pretty wonky from the standpoint of any accuracy. But this pattern finder is suggesting a minimum move of 13.2. I'm just rounding this off. But more likely you'll get into fib target 2, something like that. And we're looking here, as far as we look out on the algos, they're suggesting these algos are good for 2 or 3 bars. They're going to adjust as the reality of the world comes on. I just like that. I have them set to, I'll show you what they look like. I have them set on the inputs right now to look forward 10 bars, 10 future bars. But in reality, about 2 to 3 bars, they're pretty accurate, and at least the direction movement and whether it's increasing or falling down. And this is just huge. It's sort of like having tomorrow's Wall Street in some ways. We're looking next week. It looks like we're going to flatten out a little bit from the standpoint of what's going on with the moving averages. So we may not be able to just scream through. Tomorrow's going to be key because a higher close tomorrow, and we look at, this is the weekly. So if we look at the RTX is 12,146. So it pretty much is printing toward the higher end of the range right now. The last is, let me get to the right number here, 12,113. So we're pretty close to RTX, but we should see this thing continued. The bullish part of this pattern is the PPM2, which is suggesting we're going to see the 21-week moving average start to turn up. The only way that happens is you have to stay above that value. And that value right now is 11,505. It's still slightly negative. It's basically flat. All right, I'll try to get through the rest of this pretty quick here. I know I spent a lot of time, so I appreciate everybody going. So just love the trolls here. Yeah, I miss you, Donald Trumps. You make me feel good. You're contrary. That's good. Thank you. All right. Sorry about that. Disruptions by the trolls. Always good. Yeah, I just trying to. Unfortunately, there's no one else monitoring the stream with me, so I have to do that. So it's disrupting. That's of course the plan, right? All right. So back into it. So Russell, like I said, I'll just go weekly, and we'll start to spin through the rest of this stream tonight because getting a little long in the tooth. But Russell's got some upward projections right now. 1985, 2086, 2150. Algos are stable to up. This is weekly. We should see some continued improvement. And like I said, this is, from my viewpoint, this is exactly what the database is telling me, that these secondary stocks are going to come in. We could bring up some other indices, mid cap or something like that, but it would just leave it like this at the moment. And so, yeah, I just expect to see this continuing higher. So let's go. It should take me not too long to get through the rest of these markets. Here we go. Okay, next we'll cover the treasuries. The 10-year is very, very stable here. The 40-period moving average right now is still up at 0.44, so the support is going to be at those levels right there, 3.35. I showed you last night that there was a target, I believe, on the monthly that was 3.37. We hit it exactly. We should stabilize around here, and we will remain between these levels right now, which will be the three. We're just going to call it 335 to 370, and we should start to see some stability here. The algos are just really projecting sideways. The PPM2 is starting to show signs that it's rolling over, but that's going to be your ceiling, which is basically the number that I just put out there. That's at the 372 level. So nothing really big going on here. Rates are probably going to stabilize and get into just a really choppy sideways mode in that range that I just showed you. So we'll do weekly charts. We'll get into crude, gold, and Bitcoin, and we'll be out of here, folks. Yeah, so Ed, just real quick on your question here on Wavetech. Yeah, the fact that they're red right now means nothing. The holding periods are usually 150, 200 days. So it's the beginnings of the trade. There's a theory, I will just kind of go to that question for a minute, is that about 80% of every trade you ever put on will go against you before it goes for you. Just reality. Otherwise, you know how to buy the perfect point. Not going to happen. Been trading a very long time, over 43 years, and guess what? You don't get them. You don't. When you buy, it has nothing to do with the outcome of that trade, and it will deviate from your position. So same thing with those things with some of the indicators, sectors. These are broad-based indexes, so they might be a little negative, but you'll see they're all gonna turn. So let's go ahead, take a look here. This is crude oil, and I'll just bring this up. Is we've got some upward projections. The algos are suggesting this is weekly, that we'll see the continuation of this pattern. Let me blow it up so you can see the fib targets right now on this are 87, 94, 98. We printed 81. We should see a bit of continuation. This is weekly. As we come in here, the 21 period moving average 81.90. We get above that, then probably look to 84, 87. But we're going to get sandwiched between these levels. I don't think we get as high as the 40, which is 92. I don't see that happening, but it's certainly possible. Just looking at the fib targets, that's within realms of probabilities anyway. But we should see crude oil start to stabilize, and if Brandon and the gain starts to buy the SPR back, then they're going to bid this market to some degree. It's going to be interesting because they got a lot of oil to buy to fill that thing up, and especially if supposedly we're going into World War III, you might think you want some of that around, right? So I'm not sure, folks. We've got idiots running our country, and that's all you can say. And it's just some very, very bad choices for the planet and everything that's going on right now. I won't go any deeper in that. But this crude chart is, let's take a quick look. I'm going to bounce this over to a monthly chart. Yeah, monthly, same thing. So there's nothing really big coming in here. We're just looking at really a market trading between the 200-month moving average and the 10-month, which is 92. This is extremes, 72, 92. So you got a $20 range to work, and it looks like actually the PPM1 is starting to flatten off a little bit. So that's, I won't go through all the details here, but the slope of those moving averages tell us we're going to get crossovers. When the 10 and the 21 cross, the 10-month crosses the 21, that will actually be a bullish sign that we're starting to form a larger bottom. So I know a lot of folks think when the short term crosses that it's negative. It's in this case it is not. There's more of a bottoming pattern being signaled here. So let's keep on rolling through. So we look at gold next. Gold continues just to print up. This is monthly. Let's go over to the weekly. So we're seeing a little bit of negative for the first time for a while, as we're probably going to flatten off here. Algos are suggesting that all of this has to catch up. So we should see a pattern. I'm going to draw something in real quick on gold just so I can make this point. Is we're probably going to build something where we come back into these moving averages over here. And then this next rally, whether we go up like this or not, or if we just retest the highs, we could actually end up just being in a consolidation range. But if we do this, probably has some relevance to maybe some of this craziness that's going on in Ukraine and Russia. My concern is on that situation, not that I'm not an expert by any means. My concern is that Putin gets very aggressive here with some of the things that's going on because they're painting him in a corner. I'm not sure a guy with thousands of nuclear weapons and hypersonic missiles, you want to actually, he's not who. Yeah, this is not Iraq that we're dealing with. So. Yeah, we got another bot. Hey, this is a good sign, folks. That means the channel's getting back in the flow again here. That we're getting these bots to show up. So that's a good thing. We're getting attacked pretty good tonight. Bear with me just 1 second, and I will get rid of this. Yeah, so JW, yeah, that's exactly. You don't want to get this guy really desperate here. So, all right, so we got one market to go. I've made my point here. I still think you got $2,000 gold coming plus. I was talking about 2,900. I think those are real numbers, especially you start to look at the monthly charts. There's just some good stuff there, and I'll cover this more as yeah, I'll cover this more on Sunday night. All right, so this will be the final market. So looking at Bitcoin, like I was talking about last night, we should start to see this market start to stall just a little bit at these levels. I'm just trying to get the scaling on here right. This is the daily. So we're starting to get something going here, but there is, this looks like a completion of a sequence about to happen. So the numbers to watch, 22,438 is the number to watch. Break that, then you're probably heading back towards 20,600, maybe 20,800. That should be it. And there's not a lot more to say about this market. I do think we're finally at that top end of this thing going from that standpoint. Yeah, I did mention Jim Cramer's name last night, right? So maybe that's what's happening. It's the Cramer bots. All right, folks. This will do it for tonight and for the week. Appreciate it. I'm not sure. These live streams are long but easy to do because I can just go on and trying to create these. I may do a couple of the produced videos. We'll see what happens this weekend. But you know, the big thing for tomorrow, those of you get Wavetech, I'll try to put something out on Twitter. I've been pretty quiet on Twitter. When I was locked home sick, it was the only way I could communicate was through the Substack account. I do have some things coming out on Substack this weekend. So if you haven't signed up, it's kenderreport.substack. So you can go there and find me there and subscribe. It's free. So there's no payment necessary there at all. So yeah, somebody said, don't forget to hit the like button, the thumbs up, and we'll go forward. But anyway, folks, it's great to be back. First full week back. Today was a pretty long day for me. I'm still in recovery mode, even though I feel pretty good. There's a lot to recover from. And unfortunately, some of my exercise routine got disrupted as I got a classic treadmill injury yesterday. So I'm kind of off that for a few days. So anyway, I will talk to you folks on Sunday night. And it'll even be produced, like I said, if it's a produced video, then it will be at least premiered, so you know that it's coming ahead of time, or it will be live, and I'll put something out on Twitter. Remember, follow me on Twitter. It's PortfolioXpert, no E in the expert. Okay? Have a great weekend. Good trading tomorrow. Should be interesting to see how we finish this week. We're looking right now with the futures down 1075 right now. So like I said, the algos are suggesting we're probably going to drift into the U.S. Open. So we'll see how it happens. Anyway, folks, have a great day tomorrow and a good weekend. Talk to you Sunday night.